Hello, everyone. Or should I say, hola, buenos dias. Thank you for tuning into this Your Overseas Home webinar, where we're focusing on managing your wealth when you retire to Spain. I'm Richard Way from Your Overseas Home, and I'll be hosting this session. It's great to have you with us, whether you're watching live or our recorded version, which is available through or will be available through our on-demand webpage. So the aim of this session is to ensure that when you decide to move to Spain, all aspects of your financial profile are being considered and your assets structured in the best and most tax efficient way and in accordance with cross-border regulation. So we'll be looking at how to manage your income, pensions and other investments. We'll address tax residency and I think we'll talk a bit about currency as well and the implication of transferring funds between currencies, whether that's pounds to euros or dollars to euros or wherever your source funds are coming from. Clearly, cross-border financial planning is a complex subject and getting specialist advice is a no-brainer, which means I'm about ready to hand over to our speaker, Watson, and he'll be providing us with all the valuable information. And that today is Robin Thornton from international financial services provider Holborn Assets. Robin is an experienced wealth manager who is based in Spain, in the south. Robin's day-to-day work is helping expats or soon-to-be expats with cross-border wealth management. So including things like asset protection, taxation. I think he can even help with golden visas. So welcome, Robin. You can hear us okay?
Loud and clear. Yeah, thank you very much
Fantastic.
for that introduction.
Thank you. We've got about 45 minutes for this. We're going to start with a presentation from Robin, but we also want to hear from our audience, the live viewers, and we welcome questions. If you want to ask Robin a question, just use the questions tool, which you should see on your dashboard. Type it in there, and then I'll pass them on to Robin at an appropriate time. That is enough for me now. Sorry, Robin. Over to you. The floor is yours. Thank you.
Thank you very much for that introduction. Yeah, buenas tardes. I mean, first and foremost, this is a snapshot generalization, and I'll probably say it about 20 times as we're going through this presentation, that it's all about individual circumstances and bespoke financial planning, and that's what we do. First and foremost, let's jump in, go through the slides, hopefully give people a flavor of Spain and taxation and a little bit of bureaucracy, but obviously some of the nice bits as well. Okay, first of all, for those that are new to the channel, who are we? Who's Holborn Assets? Holborn Pass. Holborn Assets is a global wealth management company, so we hold multiple licenses all over the world. Loads of offices as well, obviously one here in Spain. I'm based here in Spain. I'm near Sotogrande in Andalusia. And we provide asset management, pension planning, life insurance, protection, estate planning, pretty much anything to do with your financial life. And I get involved in one or two other things as well. In terms of when clients are asking me, Robin, do you know anything about solar panels? Okay, no, not a great deal. Anyway, we've got about 20,000 clients and we look after about $2.5 billion of funds. So we're not massive, but we're definitely not small. And as Richard alluded to there as well, we have a global mobility division as well. So we do a lot of kind of cross-border mobility for clients who are wanting to either move to another country in terms of residency or citizenship, and that is in with the golden visas, but also with other types of visas where you're going there to become a tax resident. And I can expand on that if anybody wants any more information. Okay, so this is what we're going to run through today. Your introduction, Richard, was quite in depth. I don't think I'm going to cover everything in one session. I could probably spend an hour and a half, 2 hours just talking about tax in the correct country, never mind all the other things. But what I'd like to do today is run through some real basics, kind of fundamentals, I suppose, that that people moving to Spain should get a grasp of. And when you start to get those fundamentals together, everything else kind of fits into place. You know, it's not rocket science. So first of all, paying the tax in the correct country. Let's talk a little bit about immovable assets and pensions. ISAs, other investments. If people are coming from the UK, if they're coming from the US, it would be brokerage accounts and platforms. I'm going to talk a little bit about the Spanish investment bond as well, which is relatively popular for expats in Spain, and the other options that are available. A little bit about taxes generally and what to be aware of. Some changes that have happened in 2025. And then just almost a little bit of fun, really, but pennies for pounds, as my mother used to say. Look after the pennies, and the pounds will look after themselves. I've put a postscript here on the slide. You should speak to a professional on a one-to-one basis, and like I said, that's what we do. My contact details will be at the end of this, and what we offer is a free 30-minute session for clients to find out if we can help you. Or just give you some general guidance. You know, sometimes I've just helped clients out and say, well, actually, you could do this yourself, or you could do that, or come back to me in 2 years when you're actually thinking of moving to Spain. Okay, so this is a little bit about like tax residency 101. You are a tax resident. This is generalism. A tax resident if you are in country for more than 183 days. Or it's the center of your economic and cultural interest. Now, it gets a bit more complicated from that, particularly with the UK. You've got the statutory residence test. So you could get caught out depending on how many days you spend in the UK, etc. It's a little bit of a complicated area, but the generalisms are you move into a new country, you come to Spain, you've got your residence card, you're a tax resident in Spain if you're here for more than 6 months in a year. Okay, so comes up all the time, you know, where should I be paying this tax? Where, you know, how does it work? It's clearly a complicated process in terms of tax, generally speaking. I mean, I personally, you know, just hand it to my accountant for my stuff, you know, say, look, you know, guys, can you take care of this, or these are my records, or whatever. And I'd always encourage people to do that, even if it's for the first year or two, because unless you're speaking really good Spanish and you've got a really good background in finance, it's just a bit of a nightmare, and it's just not worth the grief. If you're coming from the UK, actually globally, there is one big deal when it comes to taxing rights, and that is if it's a government funded pension, for example, then that retains taxing rights in the country of origin. Okay, and a little bit of an explanation of that is, again, if you're coming from the UK, or even if you're coming from the US, if you had an army pension, if you had a police pension, a healthcare pension that is being paid to you, taxing rights remain in the UK. Quick example, NHS consultant, professional, works his life in the NHS, retires, getting a pension of say 50,000 a year. He pays tax on that in the UK, so everything above his personal allowance, even though he's living in Spain. Now, how does it affect him in Spain? That is then added to his cumulative income, so he doesn't get taxed on it in Spain. But if he earned anything else in another job in Spain or another pension, he'd then be taxed at the higher rate, so you know, quite potentially up to 45%. Allowances are generally lower in Spain. So again, depending which country you're coming from, again, particularly the UK is quite generous. It gives you lots of allowances where it's either tax-free or you're getting tax relief on various bits and pieces. Spain is generally not that. It's more focused towards family. So there's lots of incentives, you know, number of children you've got and type of home you've got. But generally speaking, incomes are lower in Spain. Therefore, the tax, you know, if you're earning a reasonable salary or a reasonable pension in the UK, you're likely to pay a little bit more in tax. And when clients come to me about, where should I live or what's the best, I do it in this kind of a ranking like this, is that France is probably the most expensive in terms of tax. Portugal now is quite expensive in terms of tax because the NHR has gone, and Spain is probably somewhere in the middle, but the Rioja is a lot cheaper in Spain. So how does it work in terms of taxing? Well, it's the same as most countries. It's a progressive table. So again, going back to that country of origin, NHS pension is added onto that progressive table. So again, tax resident in Spain, pay your taxes in Spain. That's exactly how it should work. Now, there are agreements between multiple countries, what's called a double taxation agreement. So you shouldn't be taxed twice, but it's really important to get your ducks in order. So again, if you're leaving from the UK, and apologies if people are not necessarily from the UK, but I'll use it as an example, is make sure you tell HMRC you're leaving. So they won't be then taxing you on things that it shouldn't be taxing you on, and then you can declare them to the authorities, the Hacienda here in Spain. Now, there are some exemptions, and there are some things around that. Property taxes are one example, and again, need to talk to people on a bespoke basis if they want to elaborate further on that. Okay, so pensions generally, PCLS, pension commencement lump sum, what people would think of as the 25% tax-free is only tax-free as a UK resident. In Spain, it's taxed as income. So you could get hit with a big, nasty bill if you do that when you're a tax resident here. All income is taxed pretty much the same, again, except for those government-funded ones. You don't, if you set up a pension scheme here, for example, as well, or an individual one, you don't get a great deal of tax relief or encouragement to save. I think that's probably going to change in the future because all governments want us kind of looking after ourselves a bit more. And also, again, a caveat here, I'll probably mention this 2 or 3 times. I have saved my clients tens of thousands. My best one is about 65,000 for one client in terms of NIC contributions. So make sure you're up to date. Even if you've only worked for 3 or 4 years, you can top that up to 10 years and get a pension in the future. Another topic, probably an hour and a half just on that. But that gives you a bit of a flavor of pensions. Now, if you're like me and over the years you've accumulated, life insurance and investment here and I don't know, a property there or whatever it is, there is a broad spectrum of what, again, each individual client will go. But this gives you a flavor of how, for example, ISAs are taxed in Spain. So they're taxed under what you would know as capital gains tax, so the growth on an annual basis, and it's anything between 19 and 30%, dependent on the gain. So the first 6,000 euros is at 19, and it goes up in stages. Once you get to 300,000 euros, that's when it kicks in at 30%. So that's the same for properties. When you're selling, there's no single property exemption or residential, your main residence exemption like there is in the UK. But it covers everything, even lottery winnings, which I can't believe it. But if you go and win 10 million on the big Christmas lottery here, you're going to be handing over 30% of that back to the government, which is a bit ironic, isn't it? Bank interest, and you can use the Spanish investment bond to defer those taxes substantially, ease the burden of administration, and open up the options to investment. And I'll touch on those a little bit more. One thing that comes up quite a lot is how a dividend's taxed. Perhaps if you're a business owner in the UK and you take dividends in the UK, which is very tax efficient to do so, unfortunately, as a Spanish tax resident, they're just taxed as regular income. Okay, so this is a quick table here of just how those taxes work. As you see, anything from 19 through to 300,000, it goes up to 30%. Non-residents, again, so if you're not a tax resident, you just own a property here, or you're spending 3 or 4 months a year here, so you could still have a permanent residence here in terms of your permanent residency if it was before Brexit, under the withdrawal agreement, but spend less than 6 months a year. So you're still a tax resident in the UK, for example. So it's a bit more attractive for non-residents in terms of those types of taxes. So what is a Spanish compliant investment bond? It's a wrapper, basically. Big providers of these are UK institutions like the Prudential, like Utmost, like Lombard. And basically, it's a wrapper where you can put your investments inside it. It's designed to be held for 5 to 25 years. You can set it up in various ways. It's extremely tax efficient because you only pay any tax once you take a withdrawal from it. So if you don't take any withdrawals, it will just keep growing and growing without any deduction of any taxes. It's also really good in terms of simplicity, because the providers of these types of things pay any tax that is due direct to Hacienda. You don't have to worry about it. They do all the accounting for you. They'll give you a tax certificate saying this is what we've paid on your behalf. Global investments, global providers, minimum is 50,000 euros. The options are doing something like Spanish compliant investment bond, or doing something what we call like an open architecture, which you can still do as well, but then it gets a bit messy in terms of reporting, because you have to declare your capital gain each year, you have to pay the taxes that are due, and you've got to get the the correct reports to your accountant. But there are kind of pros and cons to both, and that's what I do with clients, to understand their objectives, and then give them the options basically, and say, okay, well, I think this is perhaps better for you, or this is more suitable. Okay, so what about taxes? You could Google this, what are the taxes in Spain? You'll come up with a huge list of different regions. So the autonomous regions have their own individual taxes. Then you have the kind of state taxes. So it's a bit like the US, where you've got state and federal. Wealth tax has been a big issue of late. It's been big in the news as well. That was basically dumped in some regions. So here in Andalusia, where I am, they did some analysis of the people that were paying wealth tax in 2022, I think it was. The 20 highest payers of wealth tax, 10 of them had left the next year. So the government quite sensibly ditched it, although then they got into trouble with the federal government. So there's now what's called the solidarity tax, but it's much, much higher. So it's 3 million per person, as opposed to the wealth tax, which was 700,000 per person. Obviously, income taxes, capital gains, we talked about, property taxes, all the usual stuff. Inheritance and gift tax can be a little bit of an issue in some regions, although again, in some of those autonomous regions, it's been eradicated. Again, I'll use Andalusia, which is the biggest region. It's been completely taken away. Well, it's 99.999% allowance. And of course, you've got things like IVA, so VAT, sales taxes, which are 21%. And there are two different bands as well. There's a 10% band and a 4% band. So what's happened in 2025? Again, this is a bit of a flavor from on the ground. So we've all seen an increase in our electricity bills. So IVA went from 4% to 21. So adds, well, to myself, it added about 30-40 euros a month. We're just being hit again with another one thanks to the blackout. And because the Red Electrica, who are the provider, that's like the national grid, have ramped up their prices. They've cut down on the amount of green and green energy that's been produced, and moved to more, how should we say, they're not sustainable, but the more continuous, like burning gas, biofuels, etc. And that's added about another 30 or 40 euros a month to, I wouldn't say an average bill, because, but certainly for a medium household. They brought in the new 30% bracket for capital gains on over 300,000. Again, it's not really going to affect too many people. In terms of how Spain is doing, well, it's doing extremely well as an economy. It's booming. It's the highest in the Eurozone. It's 4 or 5 times the growth that the UK is seeing. Unemployment's to the lowest level. There's still some structural changes that need to happen because it's still quite bureaucratic for employers to hire people. And it's, again, since Brexit particularly, there's been difficulty with Brits coming over here and getting employment. 48 million people living in the country, and it's going up 600,000 a year. So again, pulling in people, not just to retire, although clearly there's a big market for that, but people like myself, working and living in the country and paying my dues to the government. And there's 21 million people actually employed, and that's rising substantially as well. So these are just silly little things I was thinking of the other day, and I thought, what would I do and what would I look at if I wanted to save a few pounds here and save a few pennies there? Obvious things. We're in a hot country. Energy contracts, solar, ground source heat pumps, air source heat pumps, all that kind of stuff is worth looking at. Lots of grants around for people to do that. Even still as well, you get a reduction on your EB. EB is your kind of like a council tax. So there are various schemes going, again, dependent on which region that you're living. Look at your mobile contracts. I know people who've kept their UK number for like 5 years, paying 50 quid a month, when they could have had I use Lobster, I put this here, English speaking services in English, because my Spanish isn't great, and it costs me 12 euros a month or something. And I can call the US. I can call my clients in the US on their mobile for free. It's a bit ridiculous, really, as obviously I can in the UK. Obviously, in terms of payments, fluctuations, Richard mentioned right at the beginning, things like smart currency. It's absolutely essential to look at those payments and how they're being made and transferring into euros, getting the best rate, because you will save money. You'll save a lot of money by doing it through a currency exchange like smart currency versus your bank. Your bank love people to transfer money. Guess why? Because they're making a massive margin on it. Another one that just hit me as well is, make sure when you're living here, you keep on top of your address notifications. I've now known 3 people who have had their bank accounts embargoed. They've gone to find out why, and it's because of speeding fines, or it's fines for late payment of taxes or something like this. But the authorities out here don't come to you and say, look, you're out of order, you've got a speeding fine or a parking fine. It's up to you to know it. They will write to you, and they'll write to you at their last address. And guess what? Not many people update it. So, for example, there's now the apps. You've got the DGT app, and also the Hacienda app as well. Another thing in terms of costs, money, generally, life insurance. Life insurance in Spain goes up every year. It's a typical thing run by the banks. They make an absolute fortune out of it. And every year, the cost of your life insurance will go up. If you come to an international financial services provider like ourselves, we obviously deal with the big international companies, and it's generally fixed and it doesn't change in terms of cost and obviously coverage as well. So that's something to look at. And the reason I mention that is that when you buy a property in Spain, you're forced to take the bank's life insurance for the first year, but only for the first year. So that's worth looking at. And sometimes people forget about it, just let it roll on, and it's like, wow, that's getting expensive after they've been paying it for 4 or 5 years. And then just things like subscriptions. It's a world thing, isn't it now? We've got subscriptions for Netflix and Amazon and Prime and I don't know, whatever it is. And there's plenty of apps out there now that can do that for you, but just have a look at that. I just think subscriptions are getting to the stage of where it's almost like another utility bill. Certainly if you're running a small business or you're self-employed and you need something to do this, you need something to do that as well. Okay, again, I always put this on the slides. Some kind of do's, obvious, perhaps, I don't know. In my world, nothing's ever obvious, I don't think. Seek out some smart currency advice to minimize that currency risk. So the guys at Smart Currency, you'll have an individual account manager. They can, for example, hedge that out. You could fix that in the future if you're buying a property, you're selling a property. Talk to them. Talk to us or any other regulated, qualified financial services company before you move. About 6 months is what I usually say. And that will probably give you a chance to maybe get some other things in order, start the process with, things like HMRC, etc. Sell your main residence before becoming a tax resident, and that will avoid that capital gains tax on your UK property, which is likely, quite a substantial amount. That's a little bit obvious. Now, some clients don't want to sell it for whatever reason, which I fully understand. But it will then become a liability in terms of any income that comes from that, less UK property taxes. I guess that one is always a difficult one. People are tied to their family home, but perhaps if they're, thinking it's going to be a long-term move, it makes a lot more sense. And obviously, freeing up the capital to then purchase something in Spain, which is generally a lot cheaper. Consider liquidating assets. If you go back to that first slide, I think it was the second or third slide, about taking some advice about liquidating those before you leave, and then look at putting them in equivalent tax wrappers in Spain. And again, taking PCLS before your pensions. Take advice from a regulated pension provider on that one. Again, might sound obvious. Tell all the institutions, tell your life insurance company in the UK that you're moving to Spain. Here's my new address. Thank you, Aviva. And can you just confirm I'm still covered in the European Union, which you will be 100% of the time. But it's good to have that surety. Complete HMRC notice of leaving. Tell them you're going. Bye, I'm off. And that they will then provide you, well, they won't be taxing you in future. They will expect that you're not going to file any more online taxes, unless you have some other kind of liability, like property, for example. And also update your will when you get to Spain. The Spanish system actually is really, really good, but you need to speak Spanish. So, for example, I took my lawyer along with me. Pretty standard will in English, in Spanish. But the great thing about the system is everybody's wills are logged digitally and centrally. So any lawyer, any government institution with the right credentials can access that in the future. So there's no, oh, my will's with my solicitor in Wigan, or oh, no, I moved. No, I'm in Brighton. Did we do that in Brighton? I can't remember. What did you give it to your sister, or did you give it to your grandmother? I can't remember. None of that. So it's a great system. But also, again, coming to kind of end of life stuff, is consider things like IHT liability, estate planning. There's been some big changes in the UK. Is it next year that we're moving to a residency-based IHT system, but you need to have been away from the country for a certain length of time. Again, I could probably talk about that for 2 hours on its own, but it'll bore everybody to death. But if you've got something like that, again, QR code at the end, give you my contact details, and you can hook up and have a chat. Those are my details. So QR code if you're technologically minded, and scan that, which just seems to be the way to go nowadays. My email ID, So robin.thornton at holbornassets.com. That's my mobile phone number with WhatsApp on there as well. So, if you want to just ping me a simple message, and we can go from there. So, Richard, some really easy questions, please. It's getting late in the day.
Well, they're not mine, though, I'm afraid. So I don't have any control. We have had some in, so I have a few, but let's go straight to the ones from the audience. A couple actually about government pensions, but specifically local government pensions. Two people have asked, are they taxed in the UK like the other government pensions you mentioned?
It's a good question. It depends on the scheme. Will be able to provide the simple information of whether it's a government funded pension. I'll give you an example. For example, if you're working for the NHS, you might be working on a government contract as part of the NHS. So that would be a government funded pension, and it wouldn't be taxed in Spain, it'd be taxed in the UK. But if I was maybe working for my local hospital, which is an NHS trust, that is not a government funded pension. So you see where the two differences lie. So it very much depends on the detail. It's worth just reaching out to them and asking how, what type of pension it is, and then we'll be able to verify that.
Because local governments have their own schemes, don't they? I think they're run by different people. Yeah,
exactly. You've got Birmingham City Council, which is bankrupt and in massive deficits. So that's not a government funded pension, for example, like the local authority ones. So again, it's a bit difficult to answer yes or no, but generally speaking, no. But you have to check.
Okay, thank you. Same person asked about that. Also says he has income from a rented property in the UK. Should he pay tax in Spain on the rental income if he's living there more than 183 days a year? So just generally rental income from the UK generally,
so you would pay any how should we say, property related taxes, council tax and everything else. Obviously you still pay all those. You'd have presumably some kind of net income figure, and then you would be paying tax on that in Spain. So it's relatively straightforward. Again, it depends on the individual, how it's structured. Is it held through a company? Is it held through a trust? Is it held individually? But in general terms, yeah.
And I know that there's some difference between your tax relief on rental income as well. I know as a non-resident in Spain, for example, you're taxed on all the income with no deductions, whereas in the UK you have tax deductions and you're taxed on the profit. So there's a VAT to consider as well.
Yeah, I mean that whole topic, is probably 2 or 3 webinars in its own. For example, if you own property in Spain, and it's rented out on a long-term basis, it's highly tax efficient because you get 60% exemption on the income as a Spanish resident. But again, it's a whole, like I say, it's a whole topic on its own.
Okay, and still on tax, the elephant in the room. It's been in the press again recently. This proposed, they called it 100% tax on purchases of non-resident, non-EU buyers. So if you're not buying to live there, it's not going to be a primary residence, and you're not an EU citizen.
I think
whatever it means.
I think Pedro Sanchez
is to get what? He's still having a go. What's the general vibe amongst you and your colleagues? You're based in Spain,
I think Pedro Sanchez is trying to learn from President Trump, is going hard, rattle the cage as much as you can, and you might get a little bit of a benefit out of the bottom line. So a couple of yes, and it's come up again. It's been I think it's been mentioned and brought into Parliament by the PSOE, which is not the right-wing party by any means, but one I kind of think, and from seeing stuff online and talking to various lawyers and things, it's very much a case of perhaps it's one of these trade-offs in government where minority party wants to get something through, but we're going to use this as a bit of a weapon. And first of all, it's 100% tax on the tax that you pay that they're suggesting. It's not 100% on the property value.
Yeah.
So, generally taxes are about 8.5% to buy. Again, depends on the autonomous region. It's cheaper in Madrid. Funny that, isn't it? That's the center of government. And they're talking about doubling it. If they did, that would be a major problem for Brits, obviously, but it frankly wouldn't affect anybody in the European Union, and it wouldn't really solve a problem, because people are not buying a typical Spanish home when they move to Spain. They tend to be buying nice apartments or down by the beach, or a finca in the country with land, which is not what the Spanish need in terms of property. What they need is a system where more of it gets built quicker and it's more affordable. So instead of use an analogy, if you do go through planning in the UK and you want to build a development of 50 houses, there's some requirement like 20% of them have got to be affordable housing, but that doesn't really exist over here anymore, or never really has existed. It's starting to come in. They're starting to drive that. So do I think it will go through? No, I just don't. Do I think it's probably sending some signals further down the line that there will be some increase? Probably yes. Who will it affect? The American market and the British market.
Okay. We'll wait to see what happens. On tax, again, another one here from Kirk. It's asking about capital gains tax. Is it calculated from the date of arrival in Spain or from the initial investment gains?
Yeah, so again, depends on the individual circumstances, but you become a tax resident in Spain after you've been here for 183 days, and the tax year runs January 1st to December. So again, depending when you leave the UK, it can get a little bit complicated. But basically, you would file, let's say you arrived in Spain in August of this year. You don't actually become a tax resident until February of next year, your 6 months, and you don't file your tax return for next year until the year after. So it's a bit complicated. It's a strange system. You're like a year in arrears. So I've just filed my own tax. Well, I didn't do it. I gave it to the accountants to do. But I've just had my numbers crunched for 2024, and I don't make my final payment for 2024 until November of this year. Whereas HMRC like people to pay on account. So they say, look, send us, I don't know, 25, 50,000, then we'll do the calculations and you need to keep that topped up. So it's a bit of a strange system, shall we say.
And then they keep sending you reminders as well, even though you're months away from the deadline over here.
Yeah.
HMRC. Just going back to the tax year thing, that's quite an interesting one, because obviously UK is April to April, and Spain is the calendar year. So if you move to Spain after the end of June, you can't be a tax resident in that particular year then, is that right?
Yeah, that's right. There are.
I'm just thinking about if you sold your UK residence in the second half of a year,
yeah,
without having is there any way you could still be liable for capital gains in Spain if you moved there in the second half of the year?
I know where you're going with this. Yeah.
Yeah, I guess it does introduce some interesting dynamics.
It does. There are some
that aren't aligned.
There are some opportunities, shall we say, but you have to be very careful. For example, if you told HMRC that you're leaving, well, it's no longer your main residence. If you register on the Padron in Spain, which they will want you to do, that's an indication of you being a permanent resident. If you are on a certain type of visa, which you would have to be because of the Brexit nonsense, that implies tax residency as well. So it's a bit of a murky area, but what you're alluding to is possible. So you could be like a nomad for potentially 3, 4, 5 months when you're not a tax resident anywhere. But of course, what you've told HMRC is that you are leaving to become a tax resident in Spain. They will automatically transfer that information because of the common reporting standard, and they will tell the Spanish authorities. So anybody out there that thinks tax is optional in this day and age, you'd be amazed at what data flies around and what is transferred automatically without people knowing it. For example, at the moment, the Beckham regime, so that for those of you that are not aware, it's colloquially called the Beckham regime because it was brought in for when David Beckham went to Madrid to play. It's now no longer available for sports people, but it's trying to attract high net worth and high value people to come and live in Spain. So for the first 600,000 of income, you get an exemption for 5 years. You only pay 24%, a 24% flat rate on the remittance basis. So it's quite attractive for big business people coming here, and they don't get taxed on the worldwide income. They don't get taxed on no wealth tax, etc., etc. But there's major investigations going on. So the tax office are targeting those people that have got that tax regime and investigating them in a big way. And how are they doing it? Well, they've increased the pot. The bonus pot for the tax collectors has gone up from 90 million euros to 150 million euros. So they're actually incentivized, which I suppose is not a bad thing, but they're actually incentivized to collect more taxes.
Okay. Well, take note, whoever might be in that category. Yeah. Another question here. So this is for people who aren't tax resident in Spain. So they have a second home there, and you rent it out. Are you taxed in both Spain and the UK? So I guess in this case, if this person's called Theo, they're tax resident in the UK then if they're living in the UK.
Yeah. So you have
what is the rate of tax in Spain as well?
Yeah. So you have a. It's a good question actually. I can't remember the exact detail, but you have it's like a withholding tax on the income derived in Spain. So if you're renting it out, and like I said, there are various allowances depending on who is the tenant. Again, this is to encourage people to rent property out long term, particularly obviously to increase the availability of accommodation. So it's on an individual basis, but you have I forget it's annoying me now, I can't remember exactly what it's called, but there's a tax because you are an overseas landlord, which you would pay. And then if there is any income derived from that, you would pay that in the UK. You wouldn't pay twice, if that makes sense.
Okay, so whatever you pay in one country will go towards what you should pay in the other country, and if the other country it would require a bit more, you just pay the extra in that country.
Again, it's not as clear cut as that, but in this circumstance, the person would pay the taxes due in Spain. So there is an overseas landlord tax, basically, which would be paid. And then if there's any income, so that can be offset against the income that's derived from it. If there is any income left over, or that then should be declared as other income on your tax return in the UK. Caveat is we are not registered to provide tax advice in the UK.
Right. That's actually something I think you've just actually introduced quite an interesting point. The fact that since Brexit, the advice that people get in the UK, is this right? You have to be qualified in overseas to give advice about overseas wealth management.
Yeah. So
just clarify that. It's quite useful.
It's the biggest area that I come across, and we did a webinar, didn't we, last week on a similar topic. So if you have a financial advisor in the UK, which you should have, because even though you're paying fees, you'll do better in the long term. They need to be able to provide advice to European residents. Now, since Brexit, you can't. Those companies cannot automatically passport their rights out of the UK, and generally speaking, the liability and the risk, it's not worth them doing. So that's why you've seen over the years a lot of people stopping serving clients that now live in a different country. Even the banks at some stage were starting to shut accounts down for various people. We are the kind of opposite way around. So myself, for example, I can provide financial advice to anybody practically anywhere in the world, even the US. I've got a Series 65 certificate, but not in the UK because I'm not on the FCA register. And that's an important part. So it's a difficult area. Now, clients say to me, okay, well, how do I get that advice? Well, of course, we've got contacts in the UK and we've got partner firms that we work with. But you need to have this kind of cross-border tax planning advice in this day and age. So you're receiving advice in one jurisdiction versus, where your residence is. And I think it happens a lot more with, just with people moving around the world a lot more as well.
Okay, we're just over time and we've run out of questions. I was going to ask you just one other thing. Most of your clients who you're working with at the moment coming to Spain, are they going anywhere in particular? Are they sort of down around your area in the Costa del Sol south? Yeah,
it's kind of set into two very general lists. This is very general, but it's the people who are kind of working and younger families. It tends to be the big cities, particularly Madrid, obviously, lots of employment there, lots of economic activity, Barcelona as well. And then perhaps the people who are coming here more to retire. It's extremely popular up in Almeria and that, the kind of north, I'm pointing, it's a bit strange, isn't it? But the northern costas, where it's easy, lots of English is spoken, and it feels comfortable and it's not expensive. Property prices are pretty reasonable. As you come down the costas, so I'm so from Malaga you get down to places like Marbella, obviously property prices going up and up. Estepona is a really hot town at the moment. The mayor has done a fantastic job. They've pedestrianized everything, got these beautiful boulevards. It's absolutely buzzing. Property prices are rising very quickly, lots of development going on. And then you keep coming further south. After that, you get a bit further down to places where I am towards Sotogrande, etc. Working, earning a living, the big cities, retiring, perhaps more on the costas. And of course, I've got Costa Blanca further north of Costa del Sol.
Yeah. Okay, excellent. We're well over time. Thank you very much, Robin. Really appreciate you giving up your time and the presentation, all those useful nuggets that you've shared with us today.
Pleasure.
I'd advise anyone listening to make use of Robin and Holborn Assets. They really can help you. Not doing so could be a costly oversight if you move to Spain. So make use of these guys. Just a reminder as well that this has been recorded, this session, so you can revisit it on the on-demand page of the Your Overseas Home website. Send it to friends and family, anyone else you think might find it useful. Small request, if you're feeling generous, feel free to leave us a review on the review website, Trustpilot. It all helps. Otherwise, that's it from me, Richard, and Robin at Holborn Assets. Good luck with your plans to move to Spain. And thank you for tuning in. Bye-bye.
Thank you. Bye-bye.
Bye-bye.